Swiggy's numbers have been in line with expectations and revenues. But the key question remains over here is what happens next? We are joined by Rohit Kapoor, CEO at Swiggy Food Marketplace, and Rahul Bothra, CFO at Swiggy, to decode their quarter gone by. Welcome to the show, gentlemen. Rahul, let's start with you. Losses have widened on a year-on-year basis, and this is in spite of the strong revenue growth. Though sequentially it has come down. So what is the path to profitability going to look like from here on?
As you have seen in the food delivery business, we continue to have the profitable growth trajectory. So on a run rate basis, now we are close to 1,000 crore of EBITDA, having delivered 240 crores positive EBITDA in the previous quarter. If you look at the quick commerce business, we have given our stated guidance that we want to get to contribution margin break-even by the June 2026 quarter. Towards that, in the previous quarter, we have improved our contribution margin from negative 4.6% to negative 2.6%. So we have achieved more than half the journey, and the rest is going to flow through. So we are feeling confident about our ability. Some of the key performance indicators around average order value, etc., are in a very good trajectory. So we feel confident about our chances to be able to hit contribution margin break-even by the June 2026 quarter. And from there on, the EBITDA profitability journey will start in the quick commerce business.
Okay, so that's going to be a strong number that we should be watching out for. Rahul, you're considering a fundraise of 10,000 crores. It will be a QIP or other means. When you're talking about 10,000 crores, it's the largest, I think, apart from any banks that would have done this. Why the fundraise?
So as I mentioned, in the quick commerce business, we have done pretty massive investments over the last year since our listing. It has positively surprised us, the category growth from a zip code of 50-60% that we were expecting. We have now consistently grown over 100% over the last 3 quarters. We have invested in significant capacities, both on warehousing and dark store expansions, and are feeling good about our chances to continue to appropriate more than the category growth from here on. As I said, food delivery again is in a very comfortable position from an overall profitable growth trajectory standpoint, which means that, and also we have announced our divestment in the Rapido business, which will accrue 2,400 crores of cash in this quarter. So on a standalone basis, we are well funded. Having said that, we have seen continued, heightened investments in the sector. Both legacy and new players continue to attract more and more investments. And we therefore want to have the flexibility to raise this growth capital. Some of it is going to be strategic reserve. At the same time, to be able to invest in growth of the quick commerce business, as well as some of the innovations that we continue to incubate in the business. That is where it is going to be used.
Rahul, it's very interesting to hear that competition is actually getting you to raise funds and, align well. But what are you going to use these funds for then?
As of now, no. So whenever we, once it is approved and we launch our QIP, document, at that time, we will be providing a lot more breakup.
Okay. So one aspect I want to ask you is, the company is increasing its domestic shareholding are you mulling or transitioning to a Swiggy Instamart to an inventory-led model? Is that the reason? Because Indian foreign direct investment regulations do prohibit foreign-funded marketplaces from owning inventory or exerting control over sellers. So is this also one of the reasons?
So currently, as you rightly said, we are a marketplace. At the same time, there is the optionality to convert into an inventory model once your domestic shareholding crosses the minimum threshold or majority threshold. So towards that, we have seen our domestic shareholding continue to increase. So since our listing, it has more than doubled to cross 43% as of today. And we think that it's an eventuality and that is the right thing to do over a medium period of time.
Okay, so the highlight over here is an inventory-led model is what Swiggy is going to focus on. Let me come to you, Rohit. Now, the food business, which has actually seen strong order growth and accelerated monthly transaction users as well. What is the split between the growth that is coming from new users, or if you can talk about volumes versus higher average order value in this quarter?
Yeah, so if you look at, we have had the strongest MTU growth in probably 8 quarters this time, which is a testimony to the robustness of the entire model and what we've been executing. I think I will see it in 2 parts. One is where we are trending at like GOP growth this year on year has been about 18.8%, which is very much in line with the guidance we have been giving to the markets. However, I think if we look at it from a long-term basis, there is still an X percentage of India which is on food delivery, right? And being one of the strongest incumbents there, it's also on us to constantly keep looking at that number. And there's a large part of India. We are in 700 towns, so geographically we are well covered. But in that, there is a huge opportunity to keep on expanding this business over time and getting new to category customers to come in. And while we're excited about the MTU growth which has happened, equally focused on continuously making efforts to open up the new TAM. In terms of a specific question about new users versus old users, I think we don't give out that number publicly. But needless to say that if you look at MTU growth, last quarter is about 5.7% MTU growth, which is category leading MTU growth in percentage terms. Also, over a period of full year, MTU has grown from almost like for about 14 million to about 17 million for the quarter. And I think that's a pretty robust growth. And with the number of initiatives we have and the focus on opening up new TAMs, I feel that remains a big priority area for us. I think India is still going to see a significant upside in food delivery over the time to come.
Okay, so an upside that is seen in this aspect. Now, the dark store strategy also becomes very crucial. Around little over 1,100 stores is what you have. And you've mentioned that the existing footprint can actually support 2 times the current order base. Now, what are the specific criteria for selectively adding new dark stores? And how many are you expecting to add in the second half of FY26 and 27, Rahul?
So the overall dark store expansion, from here on is going to be a derivative of growth. So in the larger cities, we continue to densify the network as a store maxes also capacity. Typically, when a store hits 2,000 to 2,500 orders per day, we break it into two, and therefore the store expansion happens in that hyperlocal area. So that's one type of expansion. The other is selectively we are continuing to add cities. So as of today, we are close to in close to 130 cities, and we will selectively keep looking to add to this base.
Okay. Rohit, coming to you in terms of the gross order value, which is lower if you have to compare it to competition, though the growth has come in higher. So what is the outlook looking like? Are you going to focus on the value or the growth?
I think market share is something we don't comment on. It's available in the public domain and for people to figure out. But on profitability, I think we, as we said shared in the analyst call as well, we are medium term looking at 5% kind of an EBITDA margin guidance, which makes it a highly profitable cash generating business over time. This quarter we did about 2.8%, which is a sequential growth of 44 basis points. I think there's a careful balance in terms of how fast we grow profitability versus what we do in terms of both the consumer value that we leave on the table. And if you read our letter, you'll see that despite a lot of noise around that, the consumer the charges as a percentage of AOV of what it takes to deliver the service have remained fairly flat for a long period of time now. And also, what do we need to do to bring new to category consumers into online food delivery? Because that remains a very important objective. Because we can see this business quarter on quarter, which is very important, but we also see this business longitudinally what it will do over 3 years, 5 years. And I think the best way to describe it on profitability and growth, we continue to operate with a telescope and a microscope at the same point in time.
Okay, so that's going to be interesting to watch out for from growth perspective. But thank you, Rahul. Thank you, Rohit, for joining in.